Hey, traders. Hey. May pips be upon you. I hope you are going to have a great weekend. I want to send you into the weekend with some information on Bitcoin. I'm hoping that you find it beneficial. Okay, brief recap. Did I just say brief recap? Brief recap of the last video I did. You'll notice I changed up my colors and everything. I hope it doesn't confuse you. The last time I was here, I had an S under here, a little dollar sign here, a little dollar sign there, little circles and everything. And I also had price in a equilateral triangle, something like this, right? And I was saying, oh man, price is moving as I'm trying to make this report. Oh Lord, have mercy. And I was saying that, all right, this is what the possible move is. We're going to come down to this support here, but price is going to come after this, the liquidity here, these stop losses of people that took longs. And so they're seeking out liquidity to build up enough of it for the move up. All right. There's also liquidity down here. All right. Somebody took a stop loss and took that long and went into nice profits and everything. But liquidity masters, liquidity managers have to come and get that. So what did price do? Price came down and did exactly as I said. Came down to the support. Boom. Then it came down just low enough past these wicks to take out the liquidity. All right. Came up, hit the bottom of the triangle, rejected, came back to support, broke through support, came down just like I said it would, and took out the liquidity here. And it tested the long-term trend line. All right. Broke through that, came, retested that trend line, and then broke down to the downside. Now, if you remember me talking about all that, I also gave you one more level. Not only did I give you the daily support and resistance level, but I also gave you the weekly support and resistance level. Why does it say weekly like that? Okay. All right. And I said, there's a chance that price could come on down there. We're halfway there, folks. We came below the daily support, turned it into resistance, and that's where we are now. That formation at resistance usually means there's more downside movement to follow. All right, because that's a bearish engulfer. And when you get that at support or resistance, you get a bullish engulfer. Usually that means price is about to go. All right, so we're going to keep our eye on this. The deal is, it's also testing resistance turn support. This little area here is resistance turn support. So we'll see that. Well, I'll talk to you about that in a hot second. Keep it in mind. All right, so we're halfway to this weekly support. Now, why is that important? Because if you look over to the left, that's where the story lies. Let's go to the 4-hour. All right. Why would price come down here? We already took the liquidity out over here. Well, we didn't, this wick didn't come past that wick, but this one did. So we took the liquidity here, but there's liquidity here. This one took out this liquidity here. There's liquidity here. Did they take that one out? No. This one is just shy of that. There's liquidity pools here. There's liquidity pools here. You got to know how price moves. The liquidity managers, the way they like to do it is here they start this movement down. People are taking stop losses right here. All right. That's the liquidity pool. They bring it down, they come up, people are taking shorts here. Okay. They come back, they come down, then they come up. People have taken longs here. All right. People are taking shorts here. So we move down. That's why the people are taking these shorts. All right. People are joining in as they move. Now they come up just high enough to take these people out. They took those, they grabbed that liquidity. Then they come down just low enough to break these lows. These people are taken out. Okay, but when they made that move, there are people here taking shorts. There are people here taking longs when they come back up and they move like this here to confuse people, taking shorts, taking longs here, taking shorts, taking longs here. They go up high, just high enough to take those people, to take them out, come down here, take these people out, leave a liquidity pool here. All right. Then what? Look at these people all up here enjoying all these profits. Guess what? I'm coming up there to get all of you. Sweep. All of them done. All right. Meanwhile, you know, they had somebody here. They came down here. They had somebody here, had people stop losses here, stop losses there. Came down, came down, came down, came up, knocked them out. People took shorts here when they came down here to get these people. That's the way they work. They go up, they say, hey, get some profits on the way down. Okay. Hey, jump in, get these profits on the way up. Okay, I got to get you, guy. Okay. Oh, yeah, I'm back. I had to get you, guy. Couldn't leave you. All right. That's the way they work. Okay. So, what does that mean for over here? Like I just told you, silly Billy. Come down this low. You got to see who's next, who's nearest, what liquidity pool they coming after. All right, that's the game. All right, here is a different situation. Between in this area, this is an area of imbalance, and they got to come and get that imbalance at some point. This is one of the reasons why they came down here to tag here, but that's a whole different explanation. But this is what they would be coming for. So they're probably heading towards this lower support. And this is a very important support because, like I told you before, uh, sorry, like I told you before, when you use your Fibonacci retracement tool down here, and you bring that all the way up to the swing high, you'll see that right around this area is the golden ratio. Okay. Just so happens to be very close to this area. So you can expect price. You can not expect it because it might not. All right. There's another scenario I'm going to go over with you, a buying scenario. All right. But it would fit that price would come down here and go for the liquidity pools here and here. All right. Because uh, this is basically, that would take care of building up enough liquidity to make that big move up, the one that everybody's expecting for the summer. All right, to take out the all-time highs, which has liquidity pools that's been there, resting pools of liquidity that's been there for the longest, right? So I'm laying out that scenario to you so that you know you can expect what to come and be prepared for it. All right, that is what I want you to do as that's what I want you to be. And if I'm going to give you information, that's what I'm hoping you get from this. All right. So this is an important area for a price to visit. All right, and just below it is liquidity pools. So if price does make it down here, just know that uh, that will be what the motivating factor. Also, I want you to notice that from the top to down to this weekly support, that would represent a 30% drop in price. If it came down a tad bit further, okay, how can I, doggone it? If it came down a hair further for the liquidity over here, it would represent a just 33, 35% drop. If it comes down to 4,200, the round numbers over here, all right, 42,000, excuse me, 42,000. All right, that's a huge jump, because the biggest jump we had over here was like 20. From here to here was 26. From here, yeah, no, from here to here was 18. From here to here it's 26. Okay, I mean that's pretty gnarly. All right, so let's that's something to keep in mind. All right, so uh, there's another scenario. Price could go from here and shoot on up. Why? Because if if you use your Fibonacci tool, if you use your Fibonacci tool here, from the beginning of this impulse to the end of the impulse, you will see that price is has retraced to the just past the 38 fib and is rejecting off of the daily. But what we're actually doing here, we're testing resistance turns support. And if the support holds, we can expect price to break these highs and go up further. What I can see is a scenario where price comes to the bottom here to the golden ratio, which happens to coincide with the long time trend line, reject from there, and then test the daily resistance, turn support. And I suspect price will reject from this area. Now look at the shape I just made. Boom, bang, boom. What we have here is the low, higher low. I mean, a lower high, higher low, higher high. We have a break in structure and the beginning of an uptrend. Naturally, I would expect, excuse me, naturally, I would expect price to test the trend line as support and continue up. We'll probably have some dealings in this area here where you might see some of that, just like you saw over here, until it breaks that level and continues higher. Very possible scenario. I want to make sure you understand there's two sides here. Okay. What is most likely? What I'm gonna tell you is what I'm thinking right now. This is a bearish structure. All right. If we look at it on the daily, it's a little easier to see. This is a bearish structure. Yes, you have the uptrend. Overall, the market I'm still bullish on this market because that's a very strong uptrend. But there was a break of structure here. These higher lows, higher highs made for a nice uptrend. All right. This is the last higher low that made this higher high. And then we broke it to the bottom. All right. What you usually want to see when you see a change in the trend is a retest of this zone where the higher low was, and then a continuation to the downside, and or continuation of the momentum, the downward momentum. And what is that shape? What is that form? A lower low, lower high, and we're on our way to with the start of a new trend. Okay. Oh, you got it. Okay. Now, what I want you to pay attention to, there's some key things to pay attention to here. Do you see this wick in isolation? This wick here is very, very bullish. There's a lot of there were sellers here forcing price down, and buyers said, look, we're strong here. There's a big presence here. And whenever you see a wick like that, you would figure that uh, whenever price comes back to this area, it's probably going to shoot up. You know what I mean? Uh, you would figure that price would continue bullish. The next candle would be a bullish one and continue up. I would bet money on it. But this wick got filled. You keep that in mind. Now, let's take a walk over here. Uh, 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 uh. You like my sound effects? All right. Let's walk over here. Do you see this wick? Very similar to that one over there, right? Look at it. Look at it. Okay. Here's the deal. Even with that wick, I would say the same thing. I see this big wick of rejection. I'm thinking the next candle is probably going to be bullish, and it might come to fill half of it. He'll fill half of that wick, and then we see some more upside. No, the next candle came by and filled that wick. All right, and this one even had a wick of rejection. We got a doji, and the following candles filled that wick. Now, look where it filled it to. Look at this line here, the weekly support. Walk with me. This is the same support I'm talking about that we might be heading towards. And look at that wick getting filled already, just like this one got filled. Okay? There is strong seller sentiment here. This is a bearish structure because the structure got broken. All right. So I'm not, I wouldn't recommend taking a long position until you get some real confirmations. All right. I would prefer, me personally, I would be looking for uh, short term, shorter term holds for shorts. Okay. Let's go to the 4 hour, and what what magic can I show you with the Fibonacci's? Any magic? This, did I cover everything? All right. Just I want to make sure you understand that there's a possibility anyway that price could go up from here. It could find support and start climbing up, get over the daily, come back, retest it, and shoot up. Come back, test the trend line, and continue making steps on the way up. But because this is a bearish structure, I want to stress this is a bearish structure. I, I'm not inclined to take a long from here. I want to see what happens with price here. All right. And I'm going to tell you something. If price makes it to the trend line, which happens to be at the same point where the 618 Fibonacci retracement is, like I just showed you from here. Ay, ay, ay. Who put that there? All right. 618 right here. All right. If it makes it there, I'll be looking for longs. I mean, shorts. I'll be looking for shorts right here. Understand something. I'm looking at market structure. I'm only looking at what price is giving me. All right. Look here. That is support. You see, it's well tested. It's crossing at the same place. It's crossing at the same place, right where that golden ratio is. All right.